Hi, this is Bill Joyce, and I'm the broker at Charter Home in Sacramento and a blogger at survivingtheamericandream.org. While I'm an advocate for home ownership in general, I've seen the kind of pain and suffering a poor home choice can have on a family's finances, marriage, health, and overall happiness. I believe the oversold and underdefined image of dream home encourages people to spend far too much money for the wrong kinds of things. Buying a house doesn't get you the life you imagine or the time to live it any more than joining a gym will make you fit. It takes discipline and effort to create the things you dream of. You can't simply buy them. Join me while I interview experts in various fields like financial planning, marriage and family therapy, career counselors, life coaches, as well as happy and unhappy homeowners willing to share their hard-earned wisdom. Today's guest is Michael Palazzolo, a financial planner with a background in housing counseling during the mortgage meltdown. Michael shares his thoughts on finding the community that you want to be part of, carefully choosing your next home's location, whether a home should be considered an investment, and striking the balance between life's competing priorities when it comes time to choose a home. Michael, tell us a little bit about your background.
So I have a combination of personal experience and professional. So I'm a former software engineer, so kind of made my way into the financial advice world basically through self-learning and found it quite engaging. And about 10 years ago, I made the switch to move into this field. And for around 5 years, I worked for a national credit and housing counseling agency. So right during the downturn in the housing market, so I was doing pre-purchase counseling, but of course, a lot of counseling and trying to help folks keep their homes. And then for the last 5 years, I worked for a registered investment advisor that managed over $1 billion in assets, so kind of a whole different view of the world. And just recently this fall, a couple of weeks ago, honestly, I launched my own fee-only planning firm as part of the XY Planning Network.
So your own firm now, the fee-only, this is a new endeavor for you. You're just launching now.
It is brand new, yes.
Well, congratulations.
Thank you.
I think there's a great need for just advice with no attachment to the choices that people make. It's just candid advice. I think that's true in the financial world as well as real estate.
It is, and I think the industry is heading that way where you're going to have a distinction between the advice and, let's say, the products. And I wish I could think of the article, but I just read an interesting article comparing the financial field to the medical field, where, as the medical field evolved to what it is today, you have the doctors who give you your advice, let's say, and then there's all the service providers of the different, let's say, drugs and surgeries or tools you can use, where at one time it was more combined. And there's an argument the financial field is heading in the same way, where you have a distinction between the advice and the, let's say, supporting products and services.
And the products themselves.
Mm-hmm. Yep.
Good. Actually, that would be a nice development.
Yep.
Now, the credit counseling or the counseling you did back during, was it 2004, 5, in that time frame when we had reached the peak and housing was beginning to suffer. You worked with people both making the decision to buy a house as well as attempting to help people stay in their homes. Talk about that a little bit. That was an interesting time in housing history.
It sure was. And I'm here based in Detroit, Michigan, but I had the opportunity not only to work with people in Michigan, but across the country. So, I did have some insight into California and New York, the very high-priced housing areas as well. And the problems were similar, just to different, let's say, magnitudes and price. And on the delinquency side, when people were behind, what you saw is folks that for whatever reason couldn't make their payments, and it could be a job that was lost or a sickness or things like that. They typically were in a house that was a stretch for their means. They probably had 2 mortgages on the house, most likely had put a 0 to 3% down payment, and then when things kind of popped out of the woodwork or happened in life as they do, they were really in a bind trying to figure out how to stay in the house or even to sell if they were really underwater. So it was a very eye-opening experience.
And with prices dropping as dramatically as they did, people were underwater out in our area, in the Sacramento area, pretty dramatically. There was no escaping that in any elegant way. It was either struggle and tough it out for a long period of time. It's a decade, and we're still not back to 2005 values, or simply abandon the property, short sell it, or allow it to go to foreclosure. There was no simple way for most people who, with those kind of low down payments, they don't have the cash to simply buy their way out of it.
Correct. And believe it or not, I just saw something in today's Wall Street Journal based on the Case-Shiller Index, where it says we finally have at least got back to the 2006 peak in house prices across the country. I mean, take it for what it's worth.
I read that. I saw that article yesterday.
Yep.
It made its way to the Wall Street Journal. I think it was on blogs popping up yesterday afternoon. And we're not in Sacramento. We're not there just yet. I think, and that's, and I think one of the comments in that article was, not that there's any significance to that fact that we're back to, house values of a decade ago. It may or may not really mean anything. It's just kind of interesting that we're just coming back to those kind of numbers. There was a lot of stuff going on back in the time. There are different people have different perspectives of what was happening during that time, and I think just my opinion of the underlying causes had more to do with abuses in the mortgage markets and the ability to sell debt and mortgage-backed securities to large-scale institutional investors around the world looking for returns, just pumped trillions of dollars, huge amounts of money into housing, not just in the United States, but worldwide. Just it was attractive and believed to be very safe debt for institutions to buy, mortgage-backed securities and all sorts of peripheral products based on mortgage-backed securities.
Yes, and to kind of get back to one of your questions about what was it like, one of the things I like to do is read, and on my website I reference some books, but there's one book in particular where it's called Your Guide to Money Happiness, and there was a concept, and I read this in the early 90s, even before I really got interested in this field, but there was this concept of debt is hard and your assets are soft, and I saw that firsthand, and I don't mean to beat on the point of don't take out a mortgage, but just be careful, because if, let's say, there is a downturn, your assets go down, the value of your house goes down, your investments are down, that's going to impact your life, but you've taken out a mortgage, whether it's debt, whether it's a mortgage or even debt on credit cards, that's hard. You have to pay it back. That's the contract. So there's really not a lot of incentive for the lender to help you, because you're in an agreement, and then if you do go down that road where you're trying to get help, it's going to be painful. You're trying to maybe renegotiate a loan, maybe have some debt forgiven. You may be missing payments, and that's going to impact your credit in a huge way, and it's just not a pleasant experience. Right.
It's all roads are bad at that point.
Mm-hmm.
Well,
yes.
Let's talk a bit about how you would advise someone, and let's say a family in particular, and maybe using a first-time, young family buying their first home. How would you advise them in terms of how much to spend, perhaps relative to income, how much perhaps for a down payment, and how much for just a total payment should someone be thinking about?
Sure, and I'm not going to get into all the different ratios that are out there, because you can go into the nitty gritty there. But the first thing I would want to go over with the client, and it's very important, is what do you think your income situation is going to look like, let's say 3 and 5 years down the road? Especially for young families, what's often happening is maybe there's 2 incomes when you're getting the mortgage or looking to buy, and you overestimate the resources you're going to have going forward. So it's first, where do you think what's your income going to look like? Are there any big changes we need to think about? And once you kind of have that level income requirement, then what I really want to look at is what's affordable for you. And a very simple way is to kind of take a big picture look at your budget. And you've got some things that you have to pay. So, you're going to have possibly a car payment if you're commuting. You're going to possibly have tuition or saving for college for your children if you have children. And you should be putting away some money for retirement today. So, we want to factor that in. At least try to start with 10% as a number to go with, but at least take care of your company match. And you kind of get those real big picture pieces in. You look at then their income and you see what's left. And that's what's left has to then accommodate their mortgage payment, their payment, their interest, their taxes and insurance, and the rest of their life. And, there's the number, 28% of your take-home pay or your gross pay. Well, then you kind of can use those levers as a starting point to say, all right, maybe you have $2,000 a month left, but you want to go on vacations. You might be, taking care of your parents, things like that. So what really is left for your mortgage payment? It could be half of that, let's say $1,000. So at least there's some good discussions, but that's a very practical way of coming up to what can I afford.
And I find that for most people, the conversation of what can I afford usually happens with a lender, a mortgage broker, or a bank, and they simply ask the lender, how much can I afford? Which is more of a question of how much are you willing to lend?
Yes, and I think that's important to know. So to get to that point, so what I like to do then is once you know what that payment can be, you can kind of find some tools online. There's lots of calculators, but you can kind of ballpark then how much of a loan would go, can go with that payment and a down payment to make things work for you. And that's really the key. And one of the key points is if you're going to look for a home is, know exactly what the maximum amount is you can borrow, but more importantly, know how much you really would want to pay for a house based on your situation. And I have honestly found, most of it personal experience, but with others, if you then are working with a good agent and tell them, communicate what the range is that you're looking for, most really will try to work with you in that range.
I think that's true of most real estate agents. They'll try and work with the range that a buyer has set for themselves. But lenders are saying, here's the maximum that you can borrow. But those figures from a bank, the maximum you can borrow, is not based on any real lifestyle choice that you might want to make about how you would want to live your life. It's based on a bank's ability to be repaid. And if you want to make a home purchase the priority, the financial priority in your life, and are willing to sacrifice in other areas, they'd be willing to lend you that amount of money. But I think there is an assumption from a lot of home buyers that that's a reasonable amount to borrow, and would allow for a reasonable balance of expenses in your life. And I think that can be a bit of a problem, that people are taking that figure, and in most cases, and it's a surprisingly large percentage, in my opinion, will borrow in the end close to those maximum amounts. They tend to shop with that budget in mind. And I think your suggestion of using that as a maximum, but figuring out what else do you have in your life that you want to have money for, including vacations, including college funds, including retirement, needs to be part of the conversation. One of the challenges is when you are told you can spend a couple $1,000 a month on a house, and you look at the numbers and the life you want to live and decide you'd really rather spend $1,000 a month on a house, is being satisfied with the $1,000 a month house, and feeling like you are going to be happy in that home, especially if you happen to go look at the $2,000 a month house. And that's one of the challenges for home buyers is accepting less than they can possibly have. It's disappointing.
Yeah, it's very disappointing. Even when I was doing the housing counseling, there would be individuals that would come in, to learn about what they could afford. Maybe they've already had some houses that they were interested in, or even the lender sent them to get the counseling. And it was often a pretty heartbreaking discussion when you would look at the budget and they really couldn't afford the house they wanted. And it's a tough conversation, but better to find out ahead of time than after you've already purchased the home and now you can't make the payments and you have to maybe even get out of the house at a bad time in the market.
And that's when it's the debt is hard. That's once that commitment is made. So the time is to have these conversations before you do it and really get your head around the idea of what you can afford and possibly come to the conclusion that we can't buy what we'd like right now. Perhaps we don't buy.
Renting's okay too. Now if you're in an apartment, that can be a little challenging because maybe your neighbors are noisy. My wife and I were in an apartment for 4 years before we bought our first house, and the last set of neighbors upstairs really helped us move on. But maybe you can find a rental in a nice neighborhood too, where more and more people are renting out their houses. Especially there still are some that are upside down, so that owners have homes that they're renting. So there's nothing wrong with renting, and it's really about looking at your whole life. And maybe you don't have the dream house, but maybe you're living close to your schools for your children or close to your family, and you can have a good life even though your house may be smaller than the one you desire.
Let's talk a little bit about the reasons to purchase a house, the quality of life versus the financial aspect.
Sure. I mean, it's a big purchase, right? So it's a big part of your life, and that's where you spend, your evenings, your weekends, your days if you've got kids. So a lot of people are really looking for the community. What does that mean? Well, it means, if you have children, are there other children in the neighborhood? Are you close to the schools that you want your children to go to, so that you're near their friends? So that's a big piece because, you spend a lot of time in your community. And one thing that's also sometimes overlooked too, because you do talk about a lot of families, is, it also builds communities for couples maybe that don't have children, because you're getting to meet other couples in the neighborhood as well, or interact with other people's children. So it kind of becomes an extended family. Other things you're looking at are just, I'll call them amenities. A lot of people would like to be able to walk downtown, let's say, to grab a bite to eat or go to a restaurant or a library. So that could be a factor in your decision, which could play into your purchase price as well. So those are some of the big picture things. And one thing that people don't think about is your travel time. So when you're looking at a house and where you want to live, you do want to think about, where do I have to go to work? Where do my kids go to school? Where does my family live? My friends? Because sometimes you might try to go buy a dream house that's not convenient location-wise, and you may be spending an awful lot of your time in your vehicle and not being in your home. So it's really kind of looking at all these pieces of how you want to live your life, and then going out and trying to find a house that accommodates all those areas.
Well, that location topic is I'm glad you bring that up. That I think that is considered more maybe on a commute, the distance from work. I think that's pretty typical for people to consider. But the proximity of a house to the things that matter in your life is really a bigger thing than most people acknowledge.
And one other point people don't think about as much today, but it's becoming more common, and we have friends that do struggle with this, even family members, is there's more options for schools today. You don't always send your children to the district in which you live. There's schools of choice and charter schools. So many parents now are probably commuting just as much to school for their children as to work. And that's something to really keep in mind, because that can throw a big wrinkle into your long-term housing plans.
Interesting. That I see that more and more, and there are very few things that parents won't do for their children. And if there is a charter school, if there's a school that you're wanting your kids to go to, that is a new commute. That is, when I was a kid, it was, you just went down to the bus stop and you went to whatever school that was nearby. I can't even imagine in my family. I think there's a difference generationally what we did with our kids and new families, but there is. I think the attitudes about kids in school and creating those opportunities has changed quite a bit, and is a commitment in time and money.
It is. So maybe instead of looking for the school district that you want to move into, you're looking to move next to the school you want your children to go to. Maybe it's a charter school or private school.
Well, which raises an interesting question now in helping a family choose a home. There are a good many priorities that begin to intertwine, and not all couples are of the same mindset about what is the priority. Have you found with families, or maybe even in your own personal life, in making a choice that these competing priorities created challenges for a couple to navigate?
I would say so. Fortunately for my personal relationship, we're pretty compatible with our views on finances and where we live. But I have seen that working with clients where there isn't that compatibility. One thing I've seen that can happen is more on the retirement side, where you may have a second marriage where one spouse is older and the new, let's say the new spouse is younger. That's where you may have a really big difference in views on housing and what type of house to get. And unfortunately, if you're the older spouse and looking to retire and you've taken on a huge mortgage to make your partner happy, it can really impact your retirement plans. And I've also seen that with children too, or to your point about wanting to help children. Parents will help their adult children maybe with buying a house or and by maybe tapping their home equity. And it comes time for retirement, and when they're trying to support that mortgage payment, it's causing them to incur a higher withdrawal rate from their retirement portfolio than if they didn't have one. So yes, it can happen in many different areas, but those competing views, sometimes one person has to win if you want to go that way, and it can have implications.
I think at times that the implications can be profound. Depending on the priorities of each spouse, and having those conversations where you get really candid and honest about it, and being on the same page, or at least having those conversations pre-purchase about what is important to each of you and what would be those priorities. And having thought through how do we feel about money, retirement, college savings, the current education for the kids, current lifestyle versus future lifestyle. There's a lot of important conversations that I think get had in very simple, almost cursory levels, which can lead to some frustration down the road when reality presents itself.
I think you hit the nail on the head. The key is really having those conversations. And I think if you do have the conversations before you make a big purchase like a house or anything, whether it's putting a large amount in an investment or starting a business, is have the conversation. And most of the time, if you really talk to the person you're trying to run a household with, I think you can work something out. To your point, it's when the decision's been made and that conversation really hasn't happened, or the tension can really occur.
A home, and I think you talk about it being a lifestyle choice. I think that happens by default far too many times. There's this general belief that a house is simply a good idea. Financially, it's a sound choice to make, And people will go to a bank, find out how much they can afford, which we've talked about being really the maximum, go shopping, both online and then out looking for a house, talk in maybe perhaps simple levels about what we want. But there's, I think, almost too much faith in the idea that it's the thing to do, that it's a smart and safe choice to make, and then find out once they're there, the decision's made, the contracts have been made, and the commitments are behind them, the impact on their life, the time it's going to take to commute to work and schools and the things that matter to them, how much they're spending, and that lifestyle is installed, and they are, without having discussed it all, without having deliberately made all those choices, they find those choices now made for them, because they chose that pretty house and that nice neighborhood that they liked. And that's a really difficult, I think that's really hard on a family and on a marriage to have the life unfold after the fact.
That's true. And, I guess my point might be, though, so if you find that really pretty house in the neighborhood you want and you just can't afford it, there could be one that's maybe almost as pretty that works. And I think one of the keys is just having patience. You will find what you're looking for. Sometimes people rush. They feel like they're under the gun to make an offer. And things typically will work out, if you keep looking.
Let's talk a little bit about a house as a financial tool, as an investment. And I know you've got some thoughts on this.
I do. And I've actually, been thinking a little bit more about it. I think really what maybe the distinction to make is the house is really an asset, but it really shouldn't be considered an investment. And what I mean by that is, you're buying this house, you're paying a good deal of money for it, and you are hoping it will appreciate, but it's where you're living. So it's very hard to use that house, unless the equity you've built in that house, unless you sell it, or unless you tap the equity, which becomes a loan again, or maybe if you're older, a reverse mortgage, which really still is a loan. So it really is good to look at it as separate from your investments, because you're living in it, and until you decide to sell it, it's not something you can tap. And on the investment side, then, what you're really trying to do is separate I'll call it your liquid cash from the house, and treat your investments as a kind of a separate entity where, you're working with your financial planner or advisor to figure out the best way to invest that money on your retirement goals. So I think there is a distinction, just because there's, the house is where you're living. You're not going to be able to use it for a lot of, day-to-day expenses, or retirement, unless, someday you make a major change with it.
Attitudes about the home as a financial tool, I think, sometimes interfere, and I'd like to get your thoughts on this. I think people have used their homes as a bank, where market cycles have caused values to rise. People do start tapping that equity, and they pull that out for current lifestyle. And people don't live in homes as long as they used to. I mean, it used to be people bought a home and they stayed there for 30 years, actually paid off mortgages. And that's much less common these days. People are moving, selling homes, upgrading, finding something they like better in an area they like better. So attitudes about a house seem to have changed. Do you have thoughts on that?
I do. And actually, one piece that maybe isn't really acknowledged much is, the way retirement's funded today. So, in the past, a larger number of people had pensions, paid for by their company, defined pensions. So they didn't have to worry about saving for retirement. So for a lot of folks, they had their retirement taken care of between pensions and Social Security. And maybe they were in a house where they couldn't save much, but that was okay, because in retirement they had the means to pay for the retirement, and then they had a paid off house which had equity and they could use it. Today, without the disappearance of pensions, the ability to save outside of that home equity is just so important, because you're going to need that to supplement your lifestyle. So I think that's one of the pieces that's missing. And then the part about using your house as a bank or, a checkbook, some people, call it, that is really, I think, a bigger issue that is kind of related to maybe buying a bigger house than you can, which is also maybe trying to support a lifestyle that's bigger than you can afford. And sometimes the home equity, and I saw that especially when I was doing the credit counseling, was used as a way to put a Band-Aid maybe on a budget problem, where it was used to fix, to help supplement a life that was not affordable. And when houses prices were going up, you could keep, increasing your line of credit, and it was kind of hidden. But that's one of the reasons that line of equity, the mentality of using home equity really became popular. Now, that's different than someone that has equity just for an emergency, let's say for a cash flow crunch where maybe they're self-employed and there's some months they need to tap it. That's fine. But I think where it comes in is it's really a way to hide maybe a budget problem.
What are your thoughts if that's very deliberate about a home and using a home or house and houses as part of wealth building, as part of building some financial independence and funding retirement?
Sure. So we'll touch on the rental piece first. I think that's a little different nuance to owning a home. So I think if you're intent on owning homes to basically become a landlord and using that for both income and appreciation, I think that really is a good idea. It's not my area of expertise, so I wouldn't be counseling clients on that. But yes, I think that's a very legitimate way to do it. With your own home, similar if you're intentional about it and you are open to, down the road using that equity in different ways, to your point, downsizing or, using a reverse mortgage or a line of credit in retirement to fund it, that's fine. The only hesitation I have, if that's your only investment, you're not very well diversified. So if the part of town you're living happens to change because a big company moved out and housing values go down, or you just have an overall drop in the market, you could leave yourself a little exposed to lack of diversification.
It can be part of, but should not be the
correct.
Part.
Yeah, so it could be maybe a significant part, but you still should have something to complement it. And I realize we're all working with limited resources, so you may have to make a tough choice where you can't. But if you can maybe downsize a little bit on your ambitions on the house, and that means allowing you to fund a 401k, let's say, in a well-diversified portfolio, that might be a better compromise.
Any suggestions for the family? And we touched on this a bit earlier, but you're talking about downsizing your expectations a little bit. You have a family that's out there. They've been given an amount they can borrow, the amount that bank would lend them, and that's going to buy a nicer house, a prettier, better location, and there's the amount that they would rather spend, which isn't really as nice. Any words of wisdom to a young family wrestling with that choice?
So I think if the not as nice is, good enough, where you can see yourself there for 5 years and raising your family and enjoying it, then I would take the little lower priced house and then use those resources to continue saving. So maybe you're again taking advantage of any match your employer may have for a 401k, but maybe at the same time you're saving money to buy a bigger house, but for those 5 years in the smaller house, you're not stressed because you can easily make the payment, and it gives you time to really learn about home ownership and maybe make a better choice on your second one. And you might be surprised. So from personal experience, my wife and I don't have kids, but our first house, and we bought 20 years ago, was a smaller house than probably most people would have been comfortable with. It was 1,250 square feet. But it had a great location near a small downtown here in Metro Detroit. And, we figured we'd stay there 5 years. We ended up staying 16 just because it was a great neighborhood. We loved walking downtown. And, you just never know how things work out. So our 5-year plan turned into 16, and we did then buy another house again near downtown for some lifestyle reasons. But you just never know. So that first house could work out really well too.
Let me ask, when you bought that house, at the point you bought it, was it a stretch for you?
It wasn't. So at that point, we've been using Quicken for probably 20 years now. We've always been very conscious of how we spent our money. So when we were looking for a home, we actually wanted to make sure we could live on one income. We've kind of always lived that way from a personal point of view. So when we talked to the lender, of course, we could have borrowed a lot more than we did, but we knew what we were looking for, and we found a really great agent, and they helped us look within our price range. But to the point of trade-offs, we could have bought a much larger home in I'll call it the suburbs of Detroit, Metro Detroit, but we preferred to buy a smaller home, closer to amenities.
And 10 years later, you've now owned a home that you could easily afford between the two of you and could afford on one income. 10 years later, how stressful financially or unstressful would you characterize that? Because I think that's a quality of life for someone in home buying mode that's out searching has a great deal to do with the house in someone's mind. And they're looking at big yard and big rooms and a beautiful kitchen. But happiness, if you've ever been house poor, if you've ever struggled financially, what does it feel like being in a house you can easily afford that's now even less expensive 10 years later relative to incomes and rents and expenses? How would you characterize that feeling to someone who's never had it?
I think it's, how to even explain it? I guess empowering, and it really gives you a huge sense of freedom. So it allowed us to do different things too. We've traveled, extensively. Allowed me to make a career change, honestly, years later by trying to free up some resources to do different things. So it's all priorities, though. You have to pick what's right for you. But it does open up a sense of, it gives you a lot more options.
Any closing thoughts? Anything that you would share with home buyers that, just based on your personal or professional experience, you'd leave someone with?
I think the biggest thing is relax and enjoy the process. And what I mean by that is, especially if it's a first home, there is so much, I don't want to say pressure, but it's part of the American dream, right? To the thought of buying your piece of land and your house, and there's a lot of kind of pressure and expectations built in, and maybe just take a step back and relax and take the time to figure out what you can afford and what's right for you. And then be patient, and enjoy the process of finding that first house, because it is a great experience. So go in prepared, just keep your expectations reasonable, and try to keep your emotions intact, and it'll actually turn out to be a pretty good experience for you.
Great, thank you, Mike. If people wanted to find you, how do they get to you?
Sure. The easiest way, and thanks for asking, is to go right to my website, and the company is Fintentional. So the whole idea is finance with intention, of which you probably have heard a theme of that today. And the website is simply www.fintentional.com.
Great. Now, as a financial planner, are you able to help people around the country, or is it licensed by state, or if someone in California wanted to reach out to you and connect, are you able to advise them?
I am. So part of the reason for doing this too is I want to, is set myself up so that I can work from anywhere and work with clients anywhere. So that if I do want to travel and take some extended time, my technology can come with me. So yes, I can talk to clients in any state. There's some licensing things I have to always take care of, but yes, anyone can contact me, whether you're here in Detroit or across the country. And I've been lucky in my two previous positions, the investment advisor I worked for and the credit counseling firm. I've always been able to work with clients throughout the country, which I find quite interesting because you get to meet a lot of great people.
On your website, you have the ability to schedule an appointment. Are these like free consultations, be able to get on the phone with you for a few minutes and see if there's a fit?
They are, yeah, that's very important. I always want to make sure it's right for both of us. So I'm happy to spend as much time as necessary, but I have the ability to schedule a 30-minute or 60-minute appointment to learn about each other. And one of the things I will do if we think we'll be a good fit for each other is I use a behavioral tool developed based on the research of the Millionaire Next Door, which really kind of gets into your money, personality, and profile. And it's a great way to have a good conversation about your beliefs and about money so that we can really help you the best way we can.
Great. Mike, I appreciate you taking the time today.
Great. Well, I appreciate it as well. Thank you.
You bet. We'll talk to you again soon.
Okay. Thank you.
Thanks for joining us on the Surviving the American Dream podcast. If you found this helpful, please leave a comment and share with your friends or family, and especially anyone looking to make their home happier.